It's Monday the 7th of August and we're going to start today looking at FX, the dollar, bonds and gold, silver and oil. First off, it's Monday, so let's take a look at the week ahead and see what we can expect. This is the calendar from Forex Factory. I kind of like this one, but there are lots of really good ones out there, and you can see that this is a very quiet start to the week. The events in red are the big ones to watch. So to start the week, we've got a really quiet, not much going on. Bank holiday in Australia, bank holiday today in Canada, and we have quite a few Fed speakers on Monday later in the day. But the big news this week in terms of what the Fed are doing is going to come from the CPI inflation data, which for the US is on Thursday, and PPI on Friday. So nothing, given that they're very clear that they're data dependent and we don't have that data yet, I don't know that these Fed speakers are going to be that market moving. Moving on to Tuesday, we've also got a really quiet pretty quiet day. On Wednesday we have Chinese CPI. Really what's going on in China couldn't be more opposite to what's going on in the US. And then right on the back of that, of course, we've got US CPI on Thursday, and then PPI, which the market will look to kind of back up what's going on in CPI. So CPI really is the big news of this week, and it's on Thursday. And China, in Asian trading, this Chinese CPI, which possibly could be negative, is going to be what the big focus is going to be on. So the big thing about this US CPI is inflation. Really, if we take a look at the longer term chart, so we'll take a look at this year-on-year chart, you can see that inflation peaked last July, so June, July. So this July data was actually the June number. And so for the first time since then we've had every month has been a decline basically for 13 months. Now, this is the first time that inflation is due to tick up again. So month on month, 0.2, but year on year is forecast to come in at 3.3 after 3. So that will be quite interesting at how the market reacts to that. We could see, it's only headline inflation, but we could see a bit of a reaction in treasuries and the dollar based on that, because inflation ticking up again will certainly postpone anticipation of rate cuts and may bring more, we are likely to stay where we are for a much longer time, and the market is going to have to price that in. The Fitch downgrade doesn't seem to be having that awful risk of moves that we feared as it did last time. So really this CPI and inflation is going to be the biggest news of the week and what that does. So let's take that away. And let's take a look at the dollar and see where we are. I'm going to start with an hourly chart, because we've been in this since the middle of July, we've been in this rising channel and we've made an equal measured move higher. We have a nasty sell-off on Friday after the jobs data, and you can see that each time we've pulled back, to this hourly 200 moving average, we found support, and after Friday's nasty sell-off, that's what we're doing again. So because we can draw this as a parallel channel, we've got 3 touches on the top side, we can line it up, project it from this low. We can say that if we break out of the bottom of this channel, if we break underneath the hourly 200 moving average, then pretty much it looks like this ABC rally is confirmed, and we will see a much bigger bearish move in the dollar. We could also, there's a number of ways to measure this, not just the 200 moving average, but if I measure from this low to this high like this, project it from here, you can see our equal measured move, and you can see that this 61.8 level here, 101.82, also confirms the bearish reversal. So if we drop underneath 101.82, we're likely to, you know, if you have an ABC, it's normally likely to be at least a 786 retrace and likely often new lows. So 786 would be back down here to 100, quite a long way. So that's what I'm watching for in the dollar. Now, obviously, if we go, that's the bearish view. That would be also underneath the 4-hour 200 moving average, which was previously resistance, 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 now potentially support. So a close underneath 101.80 in the dollar index and popping out of this channel sees another leg lower and potentially new lows. If we look at this on the daily chart, that would also be back underneath the daily 20 moving average. And, you know, confirm these bearish moving averages. It really does point to new lows and the dollar continuing lower. So weak inflation might do that at the end of this week. I don't know. For now, we are testing the highs. And I think if we've got 3 touches on this blue trend line, this frayed trend line here, clearly a close above this trend line, which would be a close above Friday's high, would suggest another leg higher, and we're going to be looking at this bigger channel here where we got under 200 moving average. So we would have a long setup. So if we look at today's where we are now, if we continue above today's high, if we break out of this consolidation to the upside, we've got a quite nice long setup. And if we break these lows, so this is basically our parameters for trading. Now, I'm not forecasting here. This is trade ideas. This is not, you know, anyone can be a forecaster and you can say, oh, well, 50% of the time you get it wrong. These are kind of realistic trade ideas. So whenever your moving averages bunch up like this, you are looking for a move. If we continue the uptrend higher, first target would be a retest of these highs, and then all the way up here to 103.80 and the daily 200 moving average and the weekly 50 moving average. So those are the parameters for the dollar. I don't know which way we're going to break, and it's Monday, so we'll see. When I look at the euro dollar, which is quite a big, as you know, quite a big factor in the dollar index, we have been rejected again on Friday at the daily 20 moving average. We couldn't get above it. We've got this channel. So just like the channel where the dollar index could pop lower, we've got this channel in the euro where we could pop higher and we would have very nice long setups. I would be looking for in the euro an inverted head and shoulders pattern for this setup. So if I saw these lows hold, if I see 1.095 hold, give us some nice green Heikin-Ashis, I think potentially we have got a long setup to challenge the top of this channel and potentially see a breakout. So we're going to we'd be looking for, you know, 7, 8, because this is 3 waves, like probably we would be looking for a 786 retrace wherever that comes in. First target, that would be 1.119. Second target would be a retest of the highs, and then if we go out to the daily in this euro, because this is a big 786 fib level, if we hold above these previous highs at 1.127, we're going to look for the 786 fib level here, and also kind of, yeah, much bigger channel going on here. Let's put it on the weekly, you can see. Now here, this is just like a projected level because I've drawn it. We've got 3 touches on the bottom. I've lined them up parallel, projected from the highs. So yeah, that's where that trend line for me comes in, and this 786. So 1.1747 above there would be quite a bottom, I think, for the euro dollar. Now, short term though, we've got to get above that weekly 200 moving average, but this looks like an ABC correction. And it looks like a nice pullback to retest these daily moving averages. So you can see a breakout from this channel would be a, excuse me, a really nice long setup. So clearly back underneath this support level that we're kind of going sideways at, or back underneath 1.09, would suggest more downside. If we go to the daily, that would be a close underneath this daily 50, which is at 1.0943. Underneath that would be another leg lower down to the daily 200 moving average. And so I don't know which way this is going to go. And those are the parameters. And I'm going to trade very carefully until we get a breakout from this range in the euro. Quite a big decision level. Dollar Canadian, as I said, if you wanted to be long on the US dollar, my favorite chart to do this on a break above this daily 50 was the Canadian dollar, and we did break above the daily 50 last week. We did hit our first target, which was the previous high, and so if we continue above it, we're going to look for 1.346. So at the moment we're going sideways at this level, which is at 1.338. So here on the hourly, you can see there's our previous high that we need to get above, and here we are going sideways at it. No decision. It looks like one of those kind of hourly broadening wedges, and today Canada is closed, so this is not a good day to be trading the Canadian dollar. We kind of need to wait for tomorrow on this one, but clearer setups I think in the Aussie and the Kiwi. First off, had this kind of important support level. Remember, this was a double top kind of sideways range. This was the bottom of the range, and we broke underneath it. Important support and resistance level. If we look left here, look, lows, lows, lows. So 0.659 basically, 0.66, 0.659 is our resistance. And on the daily, big tail when we tested it on Friday and haven't been able to get back above it again. This looks kind of bear flaggy to me. However, short term, this looks like a little ABC pullback to these moving averages, doesn't it? I don't know which way this is going to go. I think that if we get a long, I think it's not a terrible idea to have a go and see if we can get above this pivot level. If we can, the next upside target obviously would be the hourly 200 moving average. And then if we get above that, you know, we can look up to these highs and lows at 0.67. That would be a bullish reversal. But make no bones about it, this is an important pivot level at 0.66, and only a close and hold above it stops me thinking that this is bearish for the Aussie. Same thing in the Kiwi. It looks like as well, sharp move lower. Now, in terms of candlesticks here, this is a daily chart. We are holding these previous lows. But in terms of candlesticks, you know, when you have a sharp drop lower, the first place where you have strong resistance is 50% back of the open close. And sometimes it will hold you, and when you close above it, you know you're going up. For example here, nasty down candle, 50% held for 3 days, 4 days before we broke above it in another move high. And so as long as we stay underneath this 50% level here in the Kiwi, which is at 0.6115, for me this is pretty bearish and points to more downside, and but a close above it would say this down move is over and we're in a bigger bounce, which could turn into a bottom or could not. If we continue above this level, first target would be back to these daily moving averages, but really I think that, you know, this would be kind of a bigger swing. So in a horrible sideways range in the Kiwi, it's not at all my favourite pair. Let's take a look at some other markets. So the pound, first of all, the pound reversed the key resistance level. If we look at this on the weekly, we are back underneath after a reversal at the weekly 200 moving average. It was a bit of a messy reversal. If we take the most recent swing as well, it's kind of a messy 61.8 fib level, which we are back underneath. This possibly has support pretty close by at the weekly 20 moving average, and this is a kind of similar size correction to this one, so it's possible that we find our feet and head higher from here. What would be the indication that we're doing that? Well, first off, here we are sideways at the daily 50. Secondly, this kind of looks like a three-wave ABC correction as well. So just like the euro, it's a pretty nice equal measured move, isn't it? So as you know, when you bounce from an equal measured move, a close above the 61.8 fib level, back test at 1.2783, that would confirm the bullish reversal. So I think we have a nice long setup, counter, with actually the bigger daily trend. If the dollar breaks down, then the pound dollar, which has been the strongest for a while now, is a really nice long above 1.2783. And if you have a go at this trade, that's your first target, and that's what you need to get above. That's kind of also where our hourly 200 moving average is. What we could also see in this one, just to mess everybody up, because we could see 1, 2, 3 up and then 1, 2, 3 back before we have another go. So be a little bit careful. It's Monday, but back above 1.2783, we will see a uptrend, the daily uptrend, continue in the pound. And back above this 61.8 level, we could set our target really for the 786 fib retraced level next, which is up there at 1.34 potentially if the dollar breaks down. 1.34 on the upside on a move higher here and back above this daily 20. This would be my next swing target for the pound. Are we likely to get a nice swing in August instead of September? I'm not sure. If we stay underneath this level row, remember we'd be looking for this to be a bigger breakdown and potentially back to 1.23. So a bearish reversal here brings us back to these swing lows, this 50% pivot level in the middle in the pound dollar, 1.23. Not sure which way this is going to break out. Pound Canadian, because the Canadian has been pretty weak. Just want to look at this on a weekly level or a monthly level, because this is really quite a big deal on the monthly. It's the big, let's zoom out, 236 fib retrace, which is all the way from 1998, 25-year 236 fib level, which we were, it's also a pretty messy level at 1.7. It's looked so far pretty toppy at this level. You can see that first time we tagged it, we had a pretty nasty 2-month pullback. Here we are sideways at it. If we're going to recover this and get at least back to these previous highs, we need to see this level be support. So I'm watching this level pretty closely. A strong move higher in the pound. We could see bigger moves higher here. At the moment, I don't really have a clear setup with these flat moving averages, but the moving averages are leaned to, are in a bullish trend. And so for me, I would be looking for the long setups. Where might we fail? Well, if this just is our first swing lower and we see an ABC correction. So I'm staying out of this one, watching to see how this one unfolds. So a breakdown in gold would be really bullish. Sorry, a breakdown in the dollar would be really bullish for gold. Here we are sideways. In a, each other time that we've gotten up to this kind of 2080 level, we've had a really nasty big pullback. This time, however, let's look at it on the weekly. Instead of a nasty pullback, we've been pretty shallow. If we look at it on a daily, potentially in gold, this was a very nice 3-wave ABC correction. If we are going to make a bottom here with these bunched up daily moving averages, the ideal pattern, which gold likes to make, is an inverted head and shoulders pattern or a head and shoulders pattern. You see them quite a lot in gold. The problem with gold is the market makers are really mean. Now, if I put regular candles on, this looks very much to me like this was 5 waves up. So whenever you see 5 waves up, you're always going to be looking for a 3-wave correction to jump back in with this bigger trend. When I look at gold, this looks to me like first wave and then a B leg, a feng wonky one, and here we are. Also, if we're going to have a balanced head and shoulders pattern, we really need to turn up higher from here. And so I'm watching to see if we can make a lower high for another swing higher. If we can here in gold, and let's go down to the hourly and draw the same, because there's quite a lot of these channels about. I'm going to draw it so it's kind of even. Then we can project our top side one, because that obviously is going to be our like first target level. So I can actually back on. A higher low here after we've pushed above these hourly moving averages would have a target of the top of the channel, kind of 1950 probably, though this swing high and the 200 moving average at 1950 would be a better first target, and that may also just be an equal measured move here in gold. But so 1950 would be bearish resistance. It's a strong support and resistance level if we go from these lows as well. So bearish resistance around 1950, 1952, but popping above 1957, 1960 says that this was just a correction. It would line up with a breakdown in the dollar, and we could see a really nice strong move higher than above there. So that's what I'm looking for in gold. In silver, we are likely to see the same. It actually looks like a better bottoming pattern here, doesn't it? So we've had 1, 2, 3 down. We've potentially finished here. I don't know if we're going to go up again. Clearly, there is a resistance level. We would need to be quite as bullish here. We would need this to be a head and shoulders pattern. We could draw it kind of roughly like this. But really what we're doing here in the middle on this weekly chart is going in between the 61.8, 38.2 kind of golden ratio zone. So I've drawn my fibs from the high in February 21 to the low in August 2022. They've worked really well. This 236 fib was important support and resistance. This 50% was a big reversal level. We pulled back 50%, and now here we are doing that 61.8, 38.2 thing. So potentially we could do a bigger pullback here, but an inverted head and shoulders pattern here from the daily 200 to match golds. It's a little bit of a sloping neckline. Would be a really nice reversal. If we draw it on a 4 hour, it's not quite as a compelling bullish setup as gold. Actually, let's try and see if, I think perhaps better draw it as a channel. So I'm just going to connect these lows. Yeah, so if we pop higher here, make a little short-term base, little sort of hourly head and shoulders pattern, then I would say the top of this channel, the hourly 200 moving average, would be first target. And then if we break out, retest the highs, and then obviously when you do this reversal at 61.8, 786 next, so 27.44. But only if we pop out of this channel, retest the highs, and so on. So silver potentially. Now I'm not saying that we are going to turn higher here. I'm not forecasting. I'm just saying that's the trade that if we do. If we don't, remember in these golden ratio zones, you can go back and forward in between those 61.8, 38.2. So obviously if we continue lower, we're looking for 22.36 next, and potentially if that breaks down, you know, downtrend. This is right in the middle of this price range consolidation. Now, really, as I said before many times, really interesting level for me in oil. Are we going to reverse here, or is this just a pause before we push above it? 82.59, so basically 82.60 is a big 50% middle of the big trading range that we've been in since 08 down to the lows that we made in 2020. Again, I'm using the second month out on a continuous crude oil chart for US crude, because the first month, front month, has that distortion where it went underneath zero. And when I draw it like this, these fibs have worked really well. We've just done a very nice 786 back to the 38.2. And this is an important pivot level here in the middle. It was the highs in 2021, September. And above this level, again, I think we could also look to the top potentially of this channel that we're in for a third touch. We've got 2 touches. If I draw it like this, you can see, and we would look for this 61.8 fib level again. So 98, retest of 100. So are we going to go first time, or are we going to spend all the rest of the year building a bigger head and shoulders pattern here and all? I don't know. But I do believe a close above 82.59 would be significantly bullish for oil, and 98 would be next. So now I'm watching at what happens at this reversal, and so far we've only just tagged the level. So there really isn't enough information yet. And oil likes to retest, likes to double top. You can see we've already done that here on the hourly. I wouldn't be surprised if we test it again. We haven't flipped these hourly moving averages yet, but I'm watching this big level in oil. Okay, I hope that's useful. I'll be back with stocks, and yeah, send me any requests. We will be refreshing the strategy this week. So if you've been watching this video and you it's all double Dutch and you don't really understand the trading strategy, don't worry, we're going to cover it all again.